Let's take the discussion on markets forward. In the newsroom, you're watching ET now. Vinod Karki is joining us. The market is trading flat, but a lot happening in deeper parts of the market. SRF is just, commentary is just coming in on your screen. Vinod, I want to understand from you views on agrichemicals, specialty chemical, especially they've been under pressure, inventory issues and whatnot. But now SRF commentary seem to be indicating that perhaps in the second half things could improve. Do you subscribe to this, or you would want to wait it out before seeing any strong evidence that indeed things are improving before touching agrichem and specialty chem?
Yeah, Ajay, I think so. These are the initial concerns, and we have seen that these chemical companies have got significantly derated over the last several years. They have significantly outperformed, and but I think all said and done, these are still companies which should not be very expensive, like a consumer company or something like that, which are very high quality, those kind of less cyclical businesses. So there are concerns that the valuations are at a level which cannot expand further, and these growth concerns, demand concerns are, I think, the perfect situation where these stocks could peak out in terms of valuation, in my view. Wherever the growth continues to surprise or be quite strong, robust, they will continue to have those, sustain those multiples. But I don't think any further re-rating in these stocks in terms of valuation is possible.
What are your thoughts on commodity rally? Crude is back at 83, and this China stimulus talk is fueling a big rally in commodities. Is it more transitory and temporary, or are you shifting from commodity, your bullish position from commodity users which are benefiting from low commodities so far to commodity producers now, or you'll be taking a closer look there?
So if you look back the last 1 year, it was a very strange environment for commodities, in the sense that the commodity producers, despite globally commodity producers having had a windfall profits, India did not have that kind of luxury, because there were a lot of windfall tax and other levies which did not allow these companies to make high profits. In fact, the commodities actually pulled down profit pool. But this year, what is happening is commodity producers, I think, have found some kind of a base in terms of their earnings. And by all means, if you look at the consensus numbers, it seems that in 24, commodities will have it will kind of come back to normal profitability from the ones that we saw last year. But this is despite that commodity prices have actually fallen. So a mix of a reasonable level of commodity prices. Despite the fall, these prices are still reasonably robust if you see long series of commodity prices. And robust demand, if you see steel, cement, domestic demand is good. Energy, again, is looking good overall. OMCs and others. So from profit pool perspective, 24 looks like a case where commodity profit pool will not see the contraction that we saw last year. So that's good. And for the commodity users, it's a good situation overall, because commodity prices have fallen off from those levels we saw, very high levels last year. But having said that, I think commodity prices are bottoming out right now. And going forward, these kind of tailwinds will not be there. But for time being, I think both commodity producers and users both are getting benefits right now, which is kind of paradoxical, but it's happening.
So some normalizing of commodities pricing, that itself could take a big re-rating kind of a move in commodity stocks. What happens to some of the commodity stocks, which on the one hand, commodity using stocks like capital goods, autos, which on one hand were beneficiary of commodity prices coming down on margin front, but growth also coming back, flows also coming to this, chasing a bunch of quality stocks in both, and hence leading to higher valuation. Do you think a intermediate top could be made there at least, because the re-rating, further re-rating on P's may not happen, margins may not further improve from here on, and bulk of the positioning on institutional side has already happened there. So one needs to be careful there now.
So Ajay, you have to be careful that the commodity users, the commodity prices have only started kind of getting these commodity users have just started to have the benefit, seeing the benefits of these lower commodity prices, and that's just starting off. So there could be more, there could be incrementally more benefits for commodity users of lower commodity prices, because these contract prices get revised with some lag. So that's happening. So that will help them see their margins, see a better situation. But what will be more important, that's what we have seen in the past and in historical cycles also, that what is more important is the demand environment, how investors are looking at demand. While margins at the margin, I mean, they could go up a little and go up down a bit. That is important, but not the critical factor. I mean, the most critical factor is how the demand environment is looking like. So some of these companies, like the engineering infra and some of these companies, they continue to have auto, for example. So all these commodity users, discretionary consumption, and where the capex cycle is looking good, I think the demand is looking positive, whereas the input cost pressures will continue to subside even from here.
IT on this decline is the worst in the price. Was this a last of the bad quarters or not quite? You'd like to wait it out.
Which IT?
Yes, that's correct.
Yeah, so IT, I think the commentary from managements and overall, I mean, the way the hiring is panning out, I think there is pain, some more pain to go before this bottoms out. So I think there will be some more time before the valuations really bottom out and investors feel really confident that the growth trajectory is picking up again. So that seems that's our take, that there is some more time before the demand situation for IT bottoms out.
PSU banks, Canara Bank and BOB as your list of stocks where you see which have witnessed maximum consensus upgrade over the last 1 year. Canara Bank just came out with numbers, BOB still left. Do you see juice in or the second round of re-rating could start in PSU banking stock?
I think banks in general are showing very robust results. I mean, whatever have been reported so far. And I think from a longer term, medium term view, what is looking like is that the credit cycle, especially the corporate re-leveraging cycle, is just about picking up, while the NPA cycle, even as we speak, is just about bottoming out after a decadal downtrend. So both these are structurally positive in my view, that the re-leveraging cycle is just beginning while we are forming a bottom on the NPA cycle. So I think banks in general, financials are on a good footing, I would say, for some medium to long term, I think, before the NPA cycle starts turning and growth peters out. So in this case, I mean, wherever you have low, I mean, these stocks which are beaten down significantly and you're seeing some surprises, we'll continue that momentum in earnings, I think, for some more time.
Word on market valuations. Are we kind of fairly priced now, the quality of earnings which have come in, or are the falls cushioned in the market?
No, yeah. So valuations, we are absolutely certain that we are peaking out in terms of multiples. And if we look at it from multiples of market cap to GDP, so I think we are no longer in a situation where valuations are very comfortable overall in the market. And mid caps, small caps, their spreads over large caps. I mean, all that is showing that valuations are are not what you should say offering you any margin of safety right now. So overall, but see, the point is, if you, let's assume when we think that around 1920p will sustain in this environment of growth and overall how the interest rate environment is moving. So if you say that this will be the peak of the market valuation 1920x forward, what it also implies that if earnings keeps expanding by 15% range, then the market will also keep expanding at that rate, right? So market valuation peak doesn't mean that prices will stop expanding. So long as the earnings growth is there. So that is how we believe that we are in a bull market where this 1920x P can sustain only till the time that earnings growth will continue to come through, and which looks like the case that the earnings growth will be around that range.
All right, Vinod, we'll let you go on that one. Thanks so much for joining us on the show today. Time for a quick break, but right after the break, we'll put the spotlight on Shopper Stop. Venu Nair would be joining us on the other side to discuss the quarterly results and the roadmap from here on. He's just getting mic'd up. We'll be back in a minute.